Friends, in today's podcast, I'm going to talk to you about Meltdown 2020. Today is indeed a very different day in my investing career. I've never seen a 5,000 point intraday swing in the BSE Sensex. Today, I got to see it. And it appeared at one time that the markets were in a hopeless state. Many wonder how a market which went down 10% within minutes of opening actually found the resilience to bounce back. Possibly, there is always the institutional response. But I would like to ask a different question. How does a market go into freeze within minutes of opening? And how do stocks, which are very resilient for months together, go 20% on the lower circuit? Today we saw that in Kotak Bank. We saw it in some other companies as well. How do they manage to do it? I think fundamentally that the Indian markets need to question our permitting algo trading and high frequency trading. In no way does permitting these two things allow investment culture to grow or for the wealth creation of long-term investors. So today we saw again the dark and ugly side of such trades and how such selling can create a circuit filter in the market itself. It was a market-wide circuit filter. And look at what it did. It took fear to such a point that the VIX, the India VIX, went to an all-time yearly high of 59.4 and clearly created a kind of a fear psychosis which has not been seen for a very long time. And then we had the institutional response and the markets did bounce back. The other important question that comes to mind is that are we as a market being more indulgent towards bears? Are we allowing short selling with even more ferocity than ever? That's a question for which, again, we need to find honest answers. We need to explore whether the system is actually favoring short sellers. Later in the day, we found that the margins were raised, but it was too late in the day. I would think that when the markets have fallen for 2 weeks, coming up with such a response should have been much earlier. And that again brings into question how exchange mechanisms work in our country to protect retail investor sentiment. While for larger investors, losing a part of our wealth notionally for a part of a day would not matter. The same cannot be said of the small investor who makes a 500 or 1000 rupee SIP and wants to make more investments. By not following a more rigid mechanism to control speculation or short selling or indiscriminate manipulation of prices, we are doing disservice to growing the long-term investment culture. However much of money the exchanges spend on their IEPF on the one side, doing this on the other side is completely taking away all the good work done by the IEPFs by creating a spectacle in the stock market which leaves people with no knowledge and with very little investment experience completely soaked in fear. It's gripping. And I don't see any reason why this should have happened. There could have been better ways of dealing with this. And I think the exchanges keep doing this time and again. We saw this in 2009. Today again we saw this. I would think that our lessons have not been learnt. And that I say in strong words because the kind of fear that we saw today in the eyes of the small investors, in people who made those calls, those who have invested very small sums of money of their savings, as if the world had ended. And I think the exchanges just went about it very casually and responded much later than they ought to have. And that's something that's very saddening from an investor standpoint. What can governments do in these kind of situations? That is another question that comes to mind. In 2009, we remember we saw the high and mighty in government come in public in market hours, sometimes in the morning, sometimes at lunchtime, sometimes before close, trying to stabilize the public mood, trying to reassure, calm nerves, and generally such gestures were counterproductive. At least that's what we saw in that phase. Now we don't see much of it, though we do have the 3 p.m. press conferences, which really don't give any stock market centric announcements, but more policy announcements and clarifications and briefings of cabinet meetings. So that is something that the jury is still out whether we need it or not. But I personally think that government not being visible in stabilizing stock market sentiment is in the long term a healthier thing to have. What should investors do? I think that with so much of investor education, so much of awareness, so much of people talking about how behavioral science should be applied while one becomes an investor, how much we can improve our behavior, yet we still find that as investors we are very much vulnerable, and the community is more vulnerable today than it was a decade ago or even earlier, and this possibly is due to the proliferation of WhatsApp and other social media, where we keep getting bombarded by information which is negative when you are having bear markets and positive when you are having bull markets, tending to make us believe that that is the reality. And most of the time we find that social media puts us right in the thick of an alternate reality which does not last. Today is again a reminder that social media is an alternate reality, and it's not really something that can control the discourse in investing over beyond short periods of time. Before I end, I'm just going to raise a question that coronavirus started in China. It had the maximum initial impact in China. Today, as we speak, the Chinese markets seem to be least affected by the coronavirus and are almost where they began before the virus started. They have put coronavirus behind. Whereas economies like us are still grappling with the psychological wounds of the coronavirus. What does it say about us? And what does it say about China, which is possibly the most affected country for over 45-50 days? So these are questions that we as investors must think and return to some semblance of sanity, keeping our investing protected, keeping our decisions confident, and keeping our investment horizons longer. Thank you very much, and keep watching our channel.